Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right. Good morning, everybody. Welcome back to another live stream. We're taking a look at the charts ahead of PPI. Got about 15 minutes before the producer price index hits the trading world. Now, if you're not familiar with the producer price index, why does this matter? Why should we care? It's not the NFP or CPI event or FOMC, so why should we care? Well, the reason you should care is because the producer price index is a measurement of inflation instead of the consumer price index, right? How much does it cost for you to purchase things and put it in your pantry? The producer price index is further up the supply line, right? So, the production line that gets food to your pantry or fuel to your station or products to your shelves. The producer price index helps us to track further up the chain what inflation perhaps is there or not there. And as you can probably imagine, if it's in the supply line somewhere, it could trickle into the products and again, contribute to the overall kind of inflationary or lack thereof story. Yesterday, we had hotter than expected CPI, and this caused the market to freak out a little bit. The dollar got strong and the stock market and gold market fell. The question is today, are we going to get more of the same? Are we going to get a confirmation that inflation is a little stickier or hotter than we're expecting? Or is it going to perhaps undo some of the tension that was caused yesterday by CPI? In this stream, we will be taking a look at some charts. We'll be reacting to the numbers, and I'll be sharing any trades or ideas that I am personally interested in taking. If you would like to support this stream, there's a free way to do so. Hit the thumbs up button as we get started here, and let's jump into some charts. The dollar index is trading just shy of its resistance point here at 102.6. The question today, producer price index, can it actually cause the necessary sort of juice for the bulls to get above this level of resistance? Or is it going to come in cool, and is the dollar going to shrink lower in reaction to this? Again, when we talk about the producer price index, it is a meaningful measurement of inflation, just like the CPI is. The markets care about it. That's why we care about it. At the end of the day, it moves the chart quite a bit. Yesterday's CPI, again, caused some volatility in the dollar. It shot up, but noticeably, guys, it never was able to crest and break out of our zones that we drew during yesterday's live streams. We never really made it past this level. And the question is now, like I said, can PPI do it for us? Or is PPI going to reverse this dollar perhaps into a weaker sell side action move? I want to take a look at the daily chart because despite all of the craziness for the dollar index, and remember, whether you trade currency pairs, gold, oil, or indices, the dollar index is crucial to our analysis, at least in my analysis, for pretty much everything, especially with such a centric Federal Reserve, where essentially they are kind of center stage. Like I said, there are times where the Fed is not the end all be all, right? There are times where they kind of retract further into the woods, like they're like a animal in the woods. Sometimes they come out and they're a prevalent danger, and other times they kind of retract back there. They're there, but they're not as instantly pressing, Anyways, the dollar index is a very important one to watch. It's an indicator that I use all the time in my analysis. And what we should probably keep in mind is that we have not been able to cross this 102.5 zone. I mean, we've tried, we've been consolidating here, but I think if you're a dollar bull, I'll say this, you need PPI, you need something here. If it wasn't CPI, which was what many dollar bulls would have guessed would have been the catalyst, truthfully, I was pretty surprised and even mentioned to my members in our VIP group that I was a little bit concerned with the CPI number coming out hotter than expected, that it kind of put me into more of a state of concern about some of my positions. Yesterday, I was long euro dollar and the S&P 500. I'm no longer in either one of those trades. I took profits on both of them. And so far, really good trades. The question is, again, does this mean that the dollar is going to break higher again? I think I'm going to watch PPI here today for some confirmations and then probably take some trades. Let me just say, again, we've got 9 minutes to go until PPI. Couple things here for you. First of all, guys, if you're not already inside of our free Telegram channel, I just want to let you know that we will be keeping everyone up to date with chart ideas, setups, ideas, analysis. If you don't have all day to listen to YouTube videos or live streams, I totally understand. You're probably busy just like me. If you would like to get charts sent to you totally free and you have a Telegram channel, click the link. We'll drop it in the chat here in just a moment. If you use this link, you can sign up for our Telegram channel. And there it is right there. Boom. Click the free Telegram channel. Join that totally free. And that way you can keep up to date with any updates from myself and Frank and Julie. We have a trio of us that manage the Telegram channel for our viewers to keep up to date with our ideas. Anyways, today is make it or break it, I think, for the dollar index. If you get a cooling PPI number that pretty much reverses some of the effects of CPI, I think you could potentially see breakouts on the lower time frames that could lead us back into that sell trend. Sell trend is not, the downtrend is not compromised in my view, unless we break and close above that 4-hour chart that I mentioned in just the past few minutes, right? If we can break decisively above, and I've mentioned this trick to Miko and Marco yesterday, I like to use the fibs to help me decide what is a confirmed sort of breakout. And I line up the 38.2% with the area in question. So basically what I'm saying is that the dollar index trades and closes back up around 102.94, let's call it. That would tell me, okay, the dollar bulls may have it. But we're not there yet, and we don't want to call it game until the final score is up. And I think the PPI will help us to kind of picture that a little bit better. Sound, is there any sound issues? Anybody having issues with the sound? Sometimes we get those comments. I just want to make sure the audio is okay. If you guys could just let me know. All right, so moving on, we'll take a look here at some of the other markets. You can see we've got the indices down here on the day. Gold is up, silver is up. Good. Sound is good. Thank you guys. Appreciate that. Oil up a lot. I believe that there was some drama over in the Middle East. I admittedly have not looked too far into that, so I don't want to make any sort of comments too quickly on that, but I believe that there was some tension in the Middle East that caused a little bit of an overnight escalation in the obviously in the price of oil off of the reaction of that. So we're seeing oil trade up. It seems like the markets are a little concerned about it, at least. And that would also perhaps be supported by the idea that gold is up. And gold trading up while the dollar is up, that is usually a signal of fear is present in the market. So you have stocks trading down, you have oil trading up, and you have the dollar trading up, and you have gold trading up. I haven't looked at the news, but I'm going to assume that that is a little bit of concern and a little bit of fear, right? Okay, so there was some missiles launched. Yes, I believe that is as much as I saw. So don't come after me for not being fully aware of the situation, but I can't say that I fully understand or know what's going on there. So I will just say that some tensions in the Middle East are causing some concern, and we're seeing it reflected in charts. Gold is moving higher. Again, oil, dollar, gold up. Meanwhile, indices down. That tells you some fear is mixed into the equation. Anyways, dollar, being up with gold being up at the same time is usually a pretty interesting signal. It doesn't happen too often, but usually it is a sign of risk off. Anyways, what we can see here is that, again, we have this downward structure that's been going on in gold. Is this going to be the catalyst for some short-term bullish momentum? We'll take a look. When you get these geopolitical outbreaks, I mention this frequently, absolutely a very terrible time, in my personal opinion, to try and short gold, because as soon as you think like, oh, it's just a escalation, it's going to just go right back down, you might be right. But before that, markets might freak out and go straight up for gold for a few days, right? We could, if there is true concerns happening in any sort of wartime environment, whether it be Middle East, Ukraine, whatever, gold can travel. We saw this recently, guys, with the October attacks that occurred and the following kind of chaos that we saw happening in the Middle East, which has unfortunately and sadly still been in effect for the last several weeks and months since. We saw gold travel in just a quick 20 days or so, like an 11% gain. It was insane. So, when it comes to gold and fear events, gold can absolutely rally much further than you think it can. We'll see if that actually comes into play here today. And again, thoughts and prayers for people who are in those parts of the world. I'm sure that is a very terrifying experience. Let's move on here. Again, gold pushing higher. We'll monitor that one a little bit closer. I wouldn't necessarily say this is a full-blown, bullish move per se, because it seems, well, I'll take it back. Here's the thing. We've hit a daily support level that seems to be holding well. There is some geopolitical tension that's contributing to this kind of upward structure that we're seeing. You do kind of have this upward trend that's going on. It could actually be perhaps the breakout that we've been waiting for. So let me back up. What I meant to say is that when looking at the 4-hour chart, structure is a little hard for me to pick out. Like, see how we just had this very regimented downward structure. We've broken out, but I don't see like a key clear area. Perhaps you could make like, it's going to be kind of a wide area. See, if I'm trying to capture all of these rejection points, I get like a very wide, inaccurate point of potential entry. But to the credit of the bulls, again, that's a big push from the lows. That's, what is that? Almost a 2% push just in a single move higher. That's a pretty aggressive move. Again, we'll come back to gold here with just a little bit more time in a moment. We've got just, let's see, we've got like 1.5 minutes to go until we get the PPI numbers. So what I'm going to go ahead and do is I'll set up my charts here for us to keep an eye on everything. So let's go ahead and put the dollar index in the top left-hand side of the screen. So for those of you who are, for each different market, I'll give you the outline. So in the top left, we have the dollar index. In the bottom left, we're going to keep our gold chart here. In the bottom right, for my fellow index traders, we're going to keep the S&P. And in the top right, we're going to put the euro. Heads up on those of you who are trying to keep up with what I'm personally trading. I haven't mentioned this just yet, but I am out of my S&P trade. Members, you guys know I took my profits yesterday on that. Same thing with the euro dollar. I'm actually feeling really glad that I did that. I ended up closing out of my euro dollar trade. That was a long position for profits before it rolled over further. So I didn't like that CPI print yesterday. I went ahead and closed positions off of that, and that ended up being a decent decision. So we'll watch that one close. But again, we've got about 40 seconds here, guys. I just want to give you the heads up. PPI could cause some volatility, and please be careful with that. But remember that the trade setups usually occur after on these streams. We do not talk about, trading the spike. I believe that to be a gambler's sort of playground, and I'm not a big fan of that. So I like to trade the aftermath. I like to look for setups that have good risk to reward following the news. We've got about 10 seconds here to go. So here comes our breaking news. All right. So let's see what we get here for producer price index. Numbers should be coming out. Dollar index down initially here. We've got euro dollar pushing higher. S&P trading a bit higher. Gold also trading a bit higher. And again, that dollar index making a pretty good push lower. 47.80 on the S&P, euro dollar trading up to 1.097 just about. Gold 2050 is hit. 2050 is, of course, the number there. That's let's take a look at the print and see what we got here on the numbers. Numbers still pending. All right, and we got 0% core PPI and PPI. So both of them were lower than expected. That is, of course, a good sign for people who are in the disinflation trend. Definitely more of a dollar bearish report, at least on the initial reaction. So that would make sense. I mean, you're seeing the S&P push higher, seeing gold push higher, euro push higher, and the dollar index itself is actually pushing lower. So very interesting to see that here this morning. Let's go ahead and go back to our full screen. And again, there is the dollar index. Take a look at the 4-hour chart, rejecting yet again this level. And again, to our theory earlier, this does not change the overall dollar bearish structure that we have on the daily chart, right? Remember, we pointed this out. Daily chart is still just sitting at resistance. And in fact, this brings me back into a little bit more confidence of potentially getting short the dollar by proxy, whether that means being long gold, perhaps looking at euro dollar a little closer. Let's take a look at that EU position. So EU, see, I entered off of this candle here, entered here, and held for a few candles, ended up closing out after the CPI number. But this PPI number kind of brings me back into the idea. Am I going to enter at this current level? No, I would prefer to see if I can get a lower entry point. But euro dollar has been also really choppy. So I'm kind of just waiting to see if we get some momentum to pick up. Look at that. Gold loves this here today. Gold pushing higher off of this number. Producer price index cooling, showing some disinflationary trends that the market, of course, loves, at least right now. And gold definitely loving that a lot. You got silver up 2%, by the way. That's a huge move for the metals. Big push higher. The Dow trading lower still. NASDAQ flat on the day. S&P flat on the day. After a big sell-off, came right back. Kind of an interesting move there on the S&P side of things. There's oil still pushing higher. Here's some top setups here from the Edge Finder really quick. Let's see what we've got in terms of setups here today. Still bullish on indices. I like that. Oil coming in as a bullish setup. I'm going to have to look at oil a little closer. I do already kind of have some exposure to oil through my XLE bullish position that I have. That is an energy ETF. It tracks a lot of companies like Exxon, Chevron, things like that. So there is some exposure there to the energy world, which of course is up on the day. So my position is probably looking a little better right now. Euro Kiwi, you have the 10-year bond looking bullish, Bitcoin bullish, Euro Yen, Swiss Yen, Euro CAD, Dollar Yen, Euro Aussie, S&P, CAD Yen. Those are your bullish readings here for the day. Bearish readings, Aussie Swiss, Kiwi Swiss, Aussie Kiwi, and Kiwi, well, Kiwi dollar comes in at -4. Not quite a bearish reading on the Edge Finder, but pretty close. So there's your setups here for the day. We'll take a look at retail positioning also, guys. Always a useful indicator is to keep an eye on what retail positions are looking like. What are they bullish? What are they bearish, etc. We use this as a contrarian indicator. And if you're not familiar with retail positioning, what we can do is we can look at what retail traders are long or short, and we can say if they're really long something, that actually could be a potential contrarian signal or a bearish signal because, again, we know retail traders, unfortunately, typically are on the wrong side of a trade. So, we're going to keep an eye on that one. Like right now, gold is like 55.45, so it's kind of mixed. You're getting some readings like dollar yen still very strongly bearish for retail traders. So that could be a bullish signal. Let's go take a look at dollar yen, by the way. I bet you it pulled back here today. Dollar yen pulling back. I'd say structure still overall bullish, but we'll have to keep an eye on that one. Again, we've got gold mixed sentiment as we speak. So we'll keep an eye on that one. Smart money indicator. I want to look at this from a euro dollar positioning standpoint. So what the smart money indicator, what it does is allows us to track institutional money flow versus retail positioning. So this is one of my favorite indicators on the Edge Finder because it allows us to look at, like, so I mentioned euro dollar. What I like about euro dollar is look at the divergence. Okay. So in blue, we can see that institutional money has been slowly accumulating long on the euro dollar. And again, this is not guesswork. I'm not guessing based on a candlestick pattern what institutional money is doing. No. None of that. I am looking at the CFTC's report of what institutional money is doing. What are they buying? What are they selling? Right? No guesswork involved. I personally try and leave as little guesswork and as much data as I can in my trading. When it comes to net retail sentiment, retail, meanwhile, is bearish. So when you look at the euro and you say, oh, okay, so retail is shorting it and big money is building a long position, what does that tell you? Well, there's a divergence in the sentiment. One is generally more credible, I would argue, than the other. And so I do like this divergence, and I keep a close eye on it. Of course, if you trade like gold or you trade GJ, you can just select these on your own. If you would like to try out the software, by the way, we do have trials available. We'll drop the link here for trials if you'd like to sign up for one. You just apply using this link that's in the chat right now, and then you can get some information sent to you. So here it is. Click this link, try out the Edge Finder. Again, if you're wondering what the software is or you've never seen it before, we are, my company, A1 Trading, we're a software company out of Atlanta, Georgia. There's 10 of us, and we build tools for traders to help them create essentially a more data-driven trading kind of plan. I think a lot of traders rely solely on technical charts, and they wonder why it is so difficult. Right? If you only look at technical charts can have noise in them. They can have confusing, mixed messages coming out of them. You're doing a lot of guesswork. While I do believe that technical analysis can be a wonderful thing to involve in your trading, I'm a fan of using data to find trade setups and then using technicals to help you enter and exit. I said this recently, and I'll say it again. Fundamentals and technical analysis each play a key component in my trading. Fundamental analysis is the why, and technicals are the when to my trading. Why do you want to buy something? Why do you want to sell something? Why do you want to stay out of something? Fundamentals give you the answer because they allow you to look at what's really moving price. Let me just offer you something. If you're like, I don't know if fundamentals really matter. What is this stream titled? Live Trading Producer Price Index. The PPI matters. It's why the market spikes. NFP matters. It's because the data that is being delivered changes sentiment from institutional and professional traders. To act like fundamental analysis does not matter, and then to also watch fundamental news hit the market and you watch the reactions every day, you're missing something. Fundamentals absolutely matter in helping to guide the why behind market moves. Technical analysis allows us to cover the when component. When do you enter? When do you stop out? When do you trail a stop? When do you take profits? When do you take a partials? Technicals assist with that. Does that make sense? Does fundamentals and technicals overlapping? Does that make sense? Why it is so important? Type yes in the chat if that makes sense to you. But yes, that's the thing. It's so important to understand that a lot of traders, I think to me, it's somewhat laziness. People like to just say, oh, fundamentals, they don't matter. Fundamentals are hard. That's why most people don't want to talk about them. They're difficult. There's a lot of complexities to markets. And I think a lot of times traders find it easier to say, nah, I'm not going to use fundamentals because that's too hard. That's too much work. And then they also wonder why most people lose money in trading. If you don't understand the markets that you're trading in and you're just trading a line on a chart, I mean, in my opinion, that is playing trading on hard mode. Trading is hard as is, right? So there you go. Your proof that it works. Well, I appreciate it. Yeah. I'm not the only, like I said, I'm not saying that it is the only way, the truth, and the life of trading. I'm not saying that. I'm just saying that I think a lot of traders would be greatly helped if they understood the market moves that they were watching through the fundamental scope, rather than just playing guesswork and only looking at candlesticks. And yes, this is a great point too. Just a heads up, fundamentals is not the holy grail. Neither is technicals, neither is any trading strategy, not support and resistance, not breakouts, not smart money concepts, not accumulation distribution, not Wyckoff. Nothing is the holy grail. Nothing. Everything takes losses. Everything has drawdown periods. Everything has losing streaks. Absolutely everything. There's no invincible trading strategy or idea, including fundamentals. Fundamentals, I'll poke fun at fundamentals. Here's the best anti-fundamentals comment you could probably make. Fundamentals, just like technicals, are very, very subjective, because a person who's bullish and a person who's bearish can both make a pretty good fundamental argument. I would say, however, that the evidence, the weight of evidence matters a lot in fundamentals. I could make a bullish case or a bearish case for the US dollar. However, my balance beam of the bullish versus bearish arguments, in my personal view, and kind of the market's consensus view, by the way, is that the dollar bearish case is a little bit stronger. We can also see that playing out very nicely in the price action, right? Price action has been rejecting this level very well. And that actually gives me extra confirmation that if we see the breakout that I've been looking for, there could be a nice follow-through move. And yes, again, this is another reason, if you're only fundamentals, you don't really have the win, right? That's why I think combining both of them is really key. Having the fundamental side of things gives you the why, but then you also need the win. You need to know, when do you enter and how do you manage risk? Nick, what does this US news imply to the US fundamentals? PPI came out cooler than expected, following yesterday's hotter than expected CPI. The truth is probably somewhere in the middle. Inflation is overall still cooling, but yesterday there was a little bit of a pushback on that idea from CPI. Today, we got a little bit of relief, and that is why the dollar is coming down. Why is the dollar coming down? Because if inflation is cooling, it means the Fed may be sooner to cut rates. Cutting rates makes the currency a little weaker, as basically borrowing costs goes down. People go out and they spend more, and they the dollar is less in favor, especially relative to other currencies that perhaps are not so soon to rate cut. Perhaps an example for currency traders out there could be the pound. The pound seems to be a little bit in the inflation department. Let's go take a look. We can do a cool, quick little study on the Edge Finder. If you just go to the inflation tab, by the way, if you have the Edge Finder and you want to do this on your own, I find this to be pretty cool. Go dollar and go pound, right? And what we can see here is that here is the UK's inflation situation and the US's inflation situation. Both of them want to get to 2%, okay? Obviously, you could see that the US is somewhat closer to that number. So what you could perhaps kind of assume there is that there may be the case that the Fed could start to be a little bit more dovish sooner. That's what we've started to see already. And if that is kind of the exchange where the dollar, the US, is a bit more on the dovish side of things, and the British pound is lagging in that area, the pound could actually look a little stronger relative to the dollar. However, we're not getting that in the top setups algorithm. I'm going to wait for the Edge Finder to look at all of this data here for me and generate that bullish reading before I can assume kind of anything further. By the way, guys, I mentioned this earlier, but if you would like to get a copy of the Edge Finder, if you'd like to trial it out, we do have trials available currently. If you send us a message, if you fill out this form here, you can actually apply for a trial. We'll drop that link one more time for people who would like to check out the Edge Finder. Here it is. Click this link. It's in the chat. If you're in the if you're watching this at a later point, I know a lot of people watch these streams later on in the day. You can always find it. Just head over to a1trading.com, and in the top right hand of the screen, there is a button that will allow you to apply for an Edge Finder copy. So, whoops, I just clicked on the treasury yield. Put to call ratio. This is another new one. Very, very cool indicator. Quickly becoming one of my favorite ones. The put to call ratio, if you don't know what puts are bearish bets, calls are bullish bets. These are essentially, they're options. We can track market sentiment really well through the put call ratio. And what you can see here is that essentially when this number is high, that tells us that a lot of people are buying puts or bearish bets on the market. And when there's a lot of calls being bought, this number gets lowered quite a bit. So right now you can see we spiked higher and we've been coming back a little bit. But when this reaches extremes, the way I kind of look at it is a potential contrarian indicator. When everyone gets really bullish or really bearish, it could be a signal to perhaps look to go in the other way, or at the very least, trail a stop, take partials, whatever you like to do with your trade management. But I thought that this was a really cool indicator to add. I've been playing around with it in my own analysis, and I think it's really quite useful just to get a read on what the crowd is thinking. Again, if you have the Edge Finder already, this is a free add-on. We just dropped it in. So if you already have the Edge Finder, check out the put call ratio. It's a free update to you. So check it out. If you do not have the Edge Finder, I mentioned it just a moment ago, but you can apply for a trial on our site. And one other thing, if you would like to just chat with us, if you'd like to speak with somebody about the Edge Finder, we have several people on our staff who can assist you with that. We'll drop the link here right in the chat right now so that you can send a direct message to someone on our team. And a quick little heads up, it is Friday, it is PPI. If you'd like to get your hands on a copy of the Edge Finder before the weekend, shoot us a direct message here and you can speak with someone on our team. We'll give you a huge discount if you're watching the stream with us right now. We've got, today is the last day of our big discount that we're doing this week. So take advantage, shoot us a direct message if you need more information about the sale that we're doing. Someone from our team can help you with that. And we can also give you pricing details, perks, things like that. But just chat with us and someone will let you know all of that detail. Okay, so now guys, what we're going to do is we're going to transition. We're going to say hello to Kenzo in just a moment, bring him into the stream and see what his reaction to the CPI and PPI numbers were. We're going to be taking a look at some charts with him in just a moment. So stay tuned. We'll be right back after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, we're back with Kenzo. Hey, Kenzo, how's it going, man?
Yes, I'm doing great. Thanks, and you, man?
I'm doing good. It's good to have you back on the show, hanging out and talking at a really key time. Kenzo, we had the CPI number and the producer price index come out here today. Well, CPI was yesterday, but what was your takeaway from that situation? Having hotter than expected CPI and I guess cooler than expected PPI. What are your thoughts here right now in reaction to all of this news?
Yeah, actually on CPI, it's quite similar to what we saw on NFP. So the number were better, but it's not really surprising because we come in from festive season. So obviously, people were spending a lot. So the number mostly January, Feb, the number pushes up. That's why the market did not really react aggressively to those numbers. So I think the most important one is going to be from March going further. For now, the market is not convinced at all. So which means, yeah, the dollar is still very, very weak. So I'm still expecting to see the market continuing going down on DXY, which means on the other ones like gold, Euro USD, and the other ones will be pushing to the upside. That's what I'm thinking.
Yeah, I was going to ask you about gold too, Kenzo. I mean, you've got gold here pushing off of the lows. I believe that it's kind of a dual, at least from what I can tell. You have the producer price index number coming out cool, but there's like a dual effect here where we also have some tension in the Middle East going on as well, which has potentially spiked some concern. What gave me kind of an early read to that, Kenzo, was I was looking at it and I saw the dollar index was up, oil was up, and gold were up. Meanwhile, stock indices were down all at the same time. That generally would tell me that there's a little bit of concern or fear in the world. But do you think, gold, like you just said, the dollar index looking potentially overall bearish? Do you think that this could last? That this momentum here for gold could continue, perhaps to retest like 2080, like a retest of this resistance that we saw? What do you think?
Yeah, I hope if you still remember, gold it's actually a safe haven for most investors. So whatever that's happening in this geopolitical news all over the world, they boost the dollar. Plus, besides any geopolitical news, we can still go back on the US soil and say, you know what? Uh, they told us something. FOMC, we still expecting them to cut the rate. So even though it looks like it's not really going to be easy for them, but that statement means a lot. That's why you see everyone continue buying, selling their dollars and buying gold. So, and I'm still confident. Whatever that's happening, I think maybe on the second half of this year, maybe they can still cut those rates. So, on the long run, I think we are still going to see enough push to the upside. I'm very bullish on gold.
Okay, cool. And Kenzo, is that trade that you have marked up there, is that one that you have open, or is that a pending trade that you're looking to get involved in?
Yeah, this was it's actually the order. Today's order. It was a pending order, but it's already triggered. But this is
Okay.
like the third one because we had the other ones a little bit lower from yesterday,
Mhm.
and the time the market was just the time we had some serious volatile. So we have the orders from a little bit lower there. But here is just the other order just to scale up as the market just broke out of this smaller resistance here. If you check here, you will see that we had a resistance that the market was respecting. So this breakout gives us a nice push to the upside. So that was just adding on top of the orders that we already have.
Very nice. So you're catching this gold move. That's awesome. I wish I was in it with you. I was in the S&P 500. I got trailed out of it. I did capture another good move on the S&P. I caught this kind of push that we saw recently, but I did get trailed out yesterday. So I'm watching a couple markets. I'm also bullish on gold, but it looks like I might have missed the move here when it comes to, unless it pulls back. Same thing with the S&P and NASDAQ. I would like to participate if I can get a pullback, but kind of just waiting and seeing as we speak. I am also kind of bullish on oil, which is a little bit of a hedge, considering kind of geopolitical tension, but also it's I think that there's an argument the economies of the world, they are slowing, but not necessarily completely in recession looming fears, right? We still have low unemployment in the United States. We have there's still some arguments to be made that the economy could actually stay strong this year, and that could increase demand for oil. The I guess concern, the pushback on oil for me would be that the production of the United States is like a maximum ever right now and expects to be higher in 2025 and 2026. So a lot of production of oil, but will be an interesting market to follow. What about, Kenzo, do you ever trade silver? Do you ever watch silver? I'm curious about that.
Unfortunately not, man. I'm not checking silver currently. Maybe some other times because focusing on so many things at once sometimes it can be rough.
Yeah, there's too many markets, too many moving things to watch at once. I guess I know you do keep an eye on the Dow and the Nasdaq. Of the two of them, what are you anything sticking out to you on those? What do you think about the indices right now?
Yeah, the overall structure on Nasdaq and USD, they are on a very nice bullish momentum. But since yesterday, I did not really look for any trade. I'm still waiting for them to break their resistance. If you check them, they are are very closer to the resistance. They all push into the upside, but we have this area. So where we are, you can continue to buy when the market is very closer to the resistance. So I'd rather wait maybe for a smaller reversal. I thought maybe CPI was going to do that, but they were very strong. The market did not really even push that much. So I will be waiting for a breakout. Then I can say above that, it should show that the market is still aggressively bullish. Then I can buy, or maybe I'd rather wait for a smaller sell. Then I can jump on that buy again. So on USDT, it's just the same thing. Also on S&P 500, I think it's just the same thing. So on USDT, we also have a support, but I did not really take anything because I think the market is now trying to create this type of a wedge structure. So the market might just end up consolidating until we get that breakout. So for now, I'm just out. I think I will see the market maybe next week. I hope maybe we will see a sort of a breakout there.
Okay, fair enough. Yeah, I think the indices are kind of at a place where I got a little bit concerned yesterday with the CPI number coming out hotter than expected. So I'm in the same boat as you. I'm either interested in a pullback, or if it breaks out, perhaps looking for a pullback in that regard. But also with you, I am watching gold really close, and curious to see if there is a pullback, if I can get involved on that. So watching gold, watching indices as well, and should be an interesting rest of the week. And I guess, of course, next week will be interesting as well. January started out a little bit slow, but it's picking up, and we're starting to see some volatility come back into the markets. Kenzo, I want to thank you for coming on to the show. Before we let you go, I just want to say to everyone who's watching, make sure to go check out Kenzo's YouTube channel. He has his own channel, Extra Hot Forex, where you can keep up with his ideas, his analysis. You can find him on Telegram, all sorts of good stuff there. So if you have not already subscribed to Kenzo, make sure to do so. And Kenzo, thank you very much for coming on the show, and we'll see you back next week.
Thank you very much, man.
See you, man. All right, guys. And again, whenever we have guests, we thank them, but we also want to thank them by sending over some love to them. So make sure to go subscribe to Kenzo if you have not already. Okay, so yeah, I like this gold move. This is actually looking really strong here. You know, it was just such messy price action, and we've been discussing this for several days. I mean, we talk about gold every day, but the same theory just kept coming up. We can't seem to break resistance. We can't seem to break resistance. Well, it looks like we finally have. It seems like bulls are finally getting some grips on this market. We've been bullish, but now the theory here, when I say we, I'm saying like Frank and I, we've both been bullish on gold. And the question is now, actually, I don't know if Frank is in a gold trade, but either ways, now is how do I get into this trade, right? So we're starting to get bullish. Now, how do we look for pullbacks? How can you base a strategy based on fundamentals? There's many ways. You can look at, for example, environments in which inflation is cooling and the economy is staying strong, which is kind of what I think we're in right now, which is kind of a Goldilocks environment. And you can go back and do a study, for example, how does the market perform in a disinflationary or a reflation or a stagflation, or you can do studies based on inflation. You can do studies based on seasonality. This is one of my favorites, and seasonality is one of the easiest ones to understand. So for example, you take a look at seasonally, the last 10 years, for example, how has the XYZ asset performed during certain parts of the year? Well, we know that historically, the S&P 500 performs poorly in September and October in the last 10 years. You flip it around and you say, well, what about July? Well, July is pretty positive. November, pretty positive. First couple months, slightly positive, but kind of rocky start. So this is a way to test fundamentals. It's a little different than price action, right? It's definitely a different type of back testing, but you can certainly back test fundamentals. It's incredibly useful to back test fundamentals in depth. I just want to say, guys, like I said this earlier, if you would like to get a copy of the Edge Finder, the sale is ending. We are currently doing 25% off if you shoot us a direct message on our website. That is ending here today. So if you do not already have a copy of the Edge Finder and you'd like to get a full 25% off of the product, here is your link. Step 1, click the link. Step 2, chat with someone on our team. And step 3, get your edge finder. It is, again, it's discounted right now. And I said this yesterday and I'll say it again. Transparently, we plan to raise prices this year. We are adding a lot of features to the edge finder. If you already have the edge finder, don't worry. We won't charge you again. You keep everything, and we thank you for your support. This product has been an expensive project to build, but we've been able to do that and perpetually make it better because people are buying our software. And with that money, we are able to reinvest in making the software better. It's been basically a crowd-funded product. We work every day tirelessly to make it better. And if you already have it, you as a supporter of our project get to have all the updates for free. So with that said, we have more updates coming. The price is going up. And if you do not already have a copy, today is the last day of the sale. I don't know how to make it better for you. That's the best offer I've got for you. So get access to the Edge Finder, 25% off. Vincent says it's an amazing program. Thank you very much. I appreciate that. And for people who do use the Edge Finder, again, I hope you are excited as we are. We have so many cool tools coming. I cannot express how many awesome new features are coming to the Edge Finder this year. It is going to be a next level product by the end of this year. I can promise you it is going to be far better than what it currently is. And transparently, as I mentioned, the price will reflect it. So if you do not already have it, pick it up while it's low. It's like buying a stock. You're buying it, right here, right now. And I'm telling you, the Edge Finder will get better. We've got, several of us working tirelessly every day to make it so. So with that said, guys, thank you very much for tuning in to the show. I hope you have a great weekend this weekend. Spend some time back testing as we've been on that topic. And I hope you guys trade safe. Have a great rest of your day. We'll see you back next week.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles, keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way, so you need to move along. Frankie, that hard hat needs to be on your head.